Welcome back to the European Market Open. A minute to go until the start of cash equity trading. Here are your top headlines from the Bloomberg terminal. China signals its tolerance for the UN's rally is fading. The country's May factory PMI reading slows as soaring input prices weigh. Has the economy's recovery momentum peaked? That was one headline. Asian stocks and European futures retreat as investors weigh inflation risks and the strength of the economic recovery. They'll get their next hint with this week's jobs report. Markets in the UK and the US are closed. And questions about the origins of COVID-19 intensify, with experts saying China's help is needed and that information supporting the Wuhan lab leak theory is mounting. Danny?
Matt, all right, so as you say, UK is closed, but we have the largest economy still going to be open. You have Germany that will indeed open. So here's where futures are looking so far. They are pointing lower. You got barely unchanged, though, for the CAC, barely unchanged for Euro. So we're starting to get some things opened at the moment. Unfortunately, Matt, I have to tell you, the market we have open so far, not changed. It's Spain, opening up a flat 0.00%. But keep in mind, in a little bit, at any moment now, we should be getting inflation readings for Spain. We also have inflation readings for some other economies in Europe, too. So if you're a trader at this moment, you don't have the U.S. signals to trade from. Sure, you have some of Asia after China's PMIs. You don't have the U.K. You don't have a lot of the commodity markets with the LME closed. So what do? You might want to just sit and wait, see what happens with inflation figures, and think about that jobs report on Friday. All right, we have a couple more. We have a slight fractional point higher in France, slightly lower in Spain. Germany seems to be the laggard here so far, Matt, down about 0.2%. But again, these aren't huge moves. That's what the gray box is going to indicate on the GMM board. If it's gray, it means it's not moving very much. But of course, as we go throughout the day, as we get some of those commodity signals, with futures at least being open, that could weigh on some of the more material heavy stocks so far, Matt.
All right, I am seeing a headline just coming across the terminal, and I will be honest here. I'm not being sarcastic. It is pretty big news coming out of Xinhua in China. The country is going to allow, reportedly, 3 children by each couple. Now, this is something that economists have long questioned. You know, why don't they drop the regulations on how many children you can have, as they need a bigger, younger generation to carry on if they want to keep economic growth humming along. They had, obviously, the one-child policy for so long, had then relaxed it down to 2, but now they're going to allow 3 children by one couple. And you got to wonder, at this point, should there be any limit on the amount of children you can have in China? Very interesting, and something we'll definitely talk about with guests throughout the day and throughout the week. I'm going to say this is very, very big news. Let's get back to the markets, though. European equity markets looking down, looking little changed right now. Investors are looking ahead to the U.S. jobs report on Friday. As the U.S. comes back into action, things should get a little bit more lively. According to a Bloomberg survey, payrolls may have risen 650,000 in May. That would be a significant acceleration from the previous disappointment of only 266,000 in April. Now, that month, economists had predicted that we'd see a 1 million plus hiring surge. So the gain of only 266 was one of the biggest downside misses on record. Joining us to talk about that and much more, Carsten Bresky, ING Germany chief economist. Carsten, before we get to the Chinese child policy, I got to get your take on the jobs expectations out of the U.S. Growth there is still important, and everything that touches it, Fed policy, for example, to markets around the world.
No, definitely. I think we were also part of the group which had 1 million in April, and we're now expecting something like around 700,000 for Friday. New jobs added to the economy. I think the U.S. is clearly leading the Western world when it comes to opening up. When it comes to growth, when it comes to vaccinations, and I think we can be extremely optimistic about the growth outlook for the U.S. economy. What we currently see is that the U.S. would probably have double the size of the recovery that we will see in Europe. And with every positive data point, we will get more speculations about the first Fed rate hike. I must say I have really doubts to believe that it will not happen before 2024, what the Fed still wants to make us believe.
Carsten, I mean, how do you approach the jobs number on Friday? I know you said around 70,000. I was looking at some of the surveyed expectations. It's anywhere from 300,000 to 1 million. How do you sort of prepare for something like that when the last month's was just so out of whack with what most economists expected?
I know what we normally do. You try to look at survey-based data. So whether it is an ABP, let's say, survey, or you try to look at whether you see anything in the service sector. There's also trying to get a better feeling of how much of the hospitality services in the U.S. have already started to reopen. And this is more based on anecdotal evidence. And we do clearly see this reopening of hospitality services. There is really help wanted boards all over the places. And then obviously with the disappointment of April, that is, I think, the only upside of the disappointment. The May number should surprise to the upside.
You know, we've seen a shortage of workers for the services sector. I've talked to so many hotel owners, restaurant operators who say they can't get people in. Maybe that's the unemployment benefits, but we're also seeing a shortage of skilled laborers. If we want to bring back jobs like chip manufacturing in the U.S., that's going to be a problem. What's your view on wage growth? I mean, surely that plays into the transitory or not question.
Well, I think that is a good one. I think you're mixing both. And we have the service sector, which there should be upward pressure on wages very, very briefly or temporarily, because we have still the $1,400 checks, which enables many people to stay at home and not going to work because they earn more than in the low-wage sector in the U.S. So this means there will be upward pressure on wages temporarily in the service sector. When you talk about the skilled workers segment, this is transitory, and the question is, if there are no qualified workers, wages will also not go up because you don't have a match in between supply and demand for labor. So this rather asks for more automation, for more digitalization. But I think what we will see this year and also next year is clearly upward pressure on wages. If we believe the Fed, that is something the Fed would like to see, particularly if it happens in the low-wage sector.
Carsten, also when we're talking about inflation being transitory or not, I was struck by on Friday that UMich survey that had respondents seeing inflation near a decade high. I mean, the sort of break-evens, the market expectations are one thing, but if actual people who are in this economy and are dictating this economy see higher inflation to come, does the Fed risk being behind the ball here?
Hardly, Danny. I think what the case is with all these survey data, or also with market-derived inflation expectations, they never tell you anything about the future. They're always highly correlated to actual inflation. And with U.S. inflation now north of 4%, obviously, also the normal people expect higher inflation. When you look at this entire series of supply chain issues, commodity prices going up, this will not, transitory is always a matter of definition. So this is not an inflation surge which will stop this summer. This could very easily go into 2022 as well. And then it will depend on whether the Fed will accept a first wage price spiral or whether they will try to intervene immediately. I think when you listen to the Fed right now, the Fed would be willing or to tolerate at least a first wage price spiral. And so will they be too late? With a rate hike in 2024, they would definitely be behind the curve. But I think, this kind of forward guidance, I doubt it, whether anyone still believes in it. We currently expect a Fed rate hike by the end of 2022. And then I think they would be still pretty much on the curve.
All right, Carson, we're going to keep you with us. Got a lot more still to talk about. Carson Bresky is ING Germany's chief economist. He stays with us. Coming up, reeling from scandals, Credit Suisse grapples with reducing risk as well as mounting defections after Greensill and Archegos. More on that next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. We are about 13 minutes into the trading day. We're looking at stocks basically unchanged here with a lot of markets closed, though slightly lower. A lot of the bond-heavy sectors like utilities seem to be dragging down the benchmarks. Let's go ahead and see what else is going on. Let's get over to Laura Wright with the Bloomberg Business Flash.
Thanks, Danny. Apple is planning to open even more stores, upping its retail presence around the globe. A German paper reports that's despite its inner-city location struggling amid the shift to online sales. The pandemic has exacerbated the pressure on many retailers already grappling with the cost of prime locations. Qantas is offering unlimited flights for a year as part of a pool of prizes for people who've had their COVID-19 shots. It's the biggest incentive yet from an Australian business in a bid to accelerate the country's sluggish vaccine rollout.
Good morning, traders. Money never sleeps. I'm going to place a order to sell short euro, and the price I am looking to sell 121.956. So if you're looking to sell short euro, here is your chance. You can place an order and stay with me, follow my trade, and we'll see. As you can see, it moved quite substantially down. We will see what's going to happen with euro for a few minutes, because if it will move down, it's not much point will be to hold open order to sell short. All right, I'll speak to you later after we'll get filled with this order. Stay safe.
Start with the retention issue. We didn't really touch on that last time we spoke. What are they doing to try and stop really important assets from going down the elevator at the end of the day and leaving for good?
Yeah, that's become a big problem, Matt. And you can understand it because people at the bank are really feeling the reputational hit. You know, it's been a lot of turmoil for them. And imagine having to do business with that bank on your business card. In terms of what they're doing to try to retain people, they're reviewing what kinds of retention bonuses and special packages they could provide some of their key heavy hitters. That can look like a percentage of bonus off of their base pay, or it could be more long-term incentive plans. We're not quite sure yet. It can take many forms, but it will be important for them to do what they need to do to keep those people, because a lot of other banks in the area are smelling blood, and it has become a fertile hunting ground for people who are normally hard to poach.
Marion, this also comes when we have a new chairman coming into the bank. I mean, what does this all mean for him? Does this change the strategy at all?
Well, there's not necessarily. I mean, basically, he does need to make sure that he's keeping those key people on board. But when it comes to, for example, cutting the relationship with SoftBank, it does show a willingness. We're sort of seeing a new side of Credit Suisse, showing a willingness to act and cut potentially lucrative relationships because there's outsized risk. I mean, you'll remember a year ago, they reviewed their relationship with SoftBank and decided not to cut ties and just change a few rules around how SoftBank could invest in their funds, for example, and how their funds were investing in SoftBank companies. But so we're really seeing a shift from a year ago.
All right, Marion, thanks very much for joining us. Bloomberg's Marion Halftermeyer talking to us about Credit Suisse, the issues it's facing, and what it's trying to do to solve problems. Let's focus back in on the economy now. Carsten Bresky, ING Germany chief economist, is still with us. And Carsten, before we get to Europe, I want to ask you about the Chinese child policy. Now you're allowed to have 3 children there, previously 2, and before that, for so long, the very famous one-child policy. How important is it that, not only for China, but many economies around the world need to have more children, right? People need to reproduce more if we want to see continued growth.
It definitely is a fantastic economic stimulus program, Matt, and I think Europe should take this as a role model where I think the population will shrink anytime shortly. What we know about China is that demographic change will also kick in already within the next 10 years. So you could argue it comes maybe even a little bit too late, but it's clearly a very, very positive economic stimulus package, and should also cost less than all these deficit finance fiscal stimulus packages around the world that we're currently seeing.
Carson, if Europe should follow their lead, what exactly can Europe do? Because obviously there aren't child policies like this. What does it come down to things like immigration?
Immigration is one, and the other one is clearly childcare, daycare. Also, when the country I'm living in, Germany, still has some built-in incentives for spouses, very often mothers, to stay at home because it is more attractive tax-wise. So there are many structural measures that European governments can also do to really get the population growing again, and immigration would obviously be the quickest one, because then you don't start from scratch, but you can also get people at all ages into the economy, boosting structural and potential growth.
Yeah, and we just saw a headline out of the U.S. The Biden administration plans to expand the legal immigration system, according to the Times. Don't know the details of that yet, but you know, in terms of stimulus, these are great measures, Carson. But
okay, guys, I have to cancel this this order because, as you can see, it moved down. Okay, so if you wanted to trade euro, please cancel this order. We'll wait for another time. Okay, but at this moment, order to sell short cancelled. Speak to you later, guys, and stay safe.
Are we going to see more multilateral action like that?
Well, Matt, I would be glad if we would finally see the money actually reaching the economies, because I think there's a big difference.
It's not even out there yet.
The U.S. and Europe. So the U.S. really is also walking the walk and not only talking the talk. And Europe, it always takes a long while. Our Hamiltonian moment was last summer, and there hasn't been any money been paid to countries from the European Recovery Fund. So do we need more? Yes, we definitely do need more, and I think we will also get it. I think in this context, the German elections later this year are extremely crucial, because as we all know, Germany is dominating this debate on fiscal policy. And if we were to get a government which is more open to more spending, to more investing, this will clearly also then have an impact on the entire European debate. I guess it will happen. And I think that we will see, at least in the next 2 or 3 years, more fiscal stimulus, probably not as much as we see currently in the US, but for European standards, it should still be more and significant.
Yeah, you definitely have to wonder if that monster budget coming out of D.C. is going to move the needle at all in Europe. Carson, I'm afraid that's all we have time for. Thank you so much for joining Carson Bresky, ING Germany Chief Economist. Carson's going to be continuing the conversation with us on Bloomberg Radio. That's going to be at 9 a.m. UK time. Now, coming up, bags versus tech. Which one are you going to buy? European luxury stocks like LVMH and Hermes are at multiples far richer than the NASDAQ 100, which of course is at a very high multiple. But can that rally last? We're going to discuss that next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Open. We are 23 minutes into the session. You see a little bit of a mixed picture here. The CAC 40 actually gaining. The DAX is down. The Stocks Europe 600 is unchanged. And remember that the UK and US markets are closed today. So you don't have any FTSE traded stocks adding in either direction today, and you don't really have the volume either. Let's turn to the European luxury sector, though, because that's one thing we do where Europe does really reign supreme. LVMH and Hermes are rocketing to all-time highs once again. That's as stellar earnings, M&A speculation, and the promise of post-lockdown demand have boosted shares, giving them multiples that are far richer than the NASDAQ 100. Some investors are concerned about the sector heading into risky territory, getting a little bit frothy. Let's talk about it with Bloomberg's Albertina Torsoli right now. So, Albertina, talk to me about your experience covering this industry and what investors are telling you about how long this luxury rally can last.
Look, it's hard to predict, but it's fascinating to cover the industry. You know, one would have thought that with lockdowns and closed stores, the industry would have crashed. And it didn't. It just got better and better. And investors see the full value of companies that managed to raise prices on handbags, for example, even during the pandemic with closed stores. People just want more, and the reopening will obviously help. You know, once we're back traveling, all that shopping at airports that has been missing will come back. And we just had an amazing earnings season. The best-in-class brands, I'm talking here of Louis Vuitton, Christian Dior, Cartier, they produced organic growth that was north of 50% in the first quarter. And we're expecting an even better performance in the second quarter. Now, the question is, how much further can these stocks go, given the valuations? As you say, they're very frothy here.
How much further can these sales also go if presumably some of that is driven by stimulus money? At what point does that driver run out?
Exactly, that's the point. Right now, some of the biggest drivers could also be, the biggest weakness. That money will run out at some point, and let's face it, once you can travel again, see friends, go to the theater, go to a hotel, will you just be spending on bags and on jewels? That's the question that we're facing right now. There's other aspects as well. You know, one of the biggest drivers, again, is China, affluent Chinese clients. There's this thirst for anything that is European right now. But, you know, we have seen situations when that also can be a liability. There has been a cotton dispute recently with some calls for boycotts from China, and this hurt Burberry shares for a few sessions really badly. Right. It was contained, you know, it was fine, but how do we know that, you know, all of a sudden there won't be bigger tensions? Geopolitical tensions could really hurt the sector.
Absolutely. Albertina, thanks so much for joining us. Albertina Torsoli talking luxury. This is Bloomberg.
Okay, traders, new order. I'm going to place new order to buy Japanese yen. The price I'm looking to buy 109,707. Okay, so please place your order if you're looking to trade Japanese yen at 109,707.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Open. We are a half hour into the session, and although it's going to be light on volume today, the UK markets are closed, US markets are closed. We still see movement on the CAC 40, a little bit of a gain there, 0.1%, and a drop on the DAX of about 0.3%. So a little bit of a mixed picture here, Danny, but we do see some movement. We do see a little bit of vol here.
Yeah, and look, Matt, if you want to look for idiosyncratic stories, I kind of feel like the only one right now is going to be banks. Banks is kind of low down on the GRR screen, the group ranked returns. It's the third worst. A lot of that probably coming from Deutsche Bank falling more than 2% on Friday, getting admonished from the Fed over...
Okay, guys, as you can see, position opened on Japanese yen at 109,707. All of you guys who decided to trade Japanese yen today in UK and USA, it's bank holiday, but money never sleeps. All right, so we in, and stay with me, follow my trades, and we'll end up with profit. Also, on another note, I'm going to place an order to buy Bitcoin. The price I'm looking to buy 35,000 to 36. So if you look into trade Bitcoin, here is your chance. You can buy at 35,000 to 36. So the order placed. Let me I'll show you how far away from. This is where we are. I will adjust any minute right now. So that's it. The order placed. So if you look into trade Bitcoin, please do so and stay with me. Order place to buy Bitcoin. Stay safe.
The 2015 nuclear deal have kicked off in Vienna. Russia's envoy says there's an understanding among the countries involved that the current round should be the final one. The deal aims to reinstate caps on Iran's nuclear program in exchange for the country's return to oil markets and the global economy. The Biden administration has announced it will reimpose sanctions against 9 state-owned enterprises in Belarus. It's also working on additional penalties to target officials in the Lukashenko administration. The U.S. is urging its citizens to avoid Belarus over the forced landing of a Ryanair flight and the arrest of a dissident journalist. The Tokyo Olympics is facing a shortage of doctors due to the pandemic. Organizers originally planned to have about 10,000 medical staff on standby, but they've had to cut that number down to about 7,000. Japan's medical establishment is becoming increasingly worried about bringing 78,000 people from 200 countries to the capital. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny, Matt.
Laura, thanks very much. Laura right there in London. Now, let's turn to India. GDP data for the first quarter of 2021 is out later today. It's going to provide insight into a recovery that's now been cut short in the current quarter as India struggles to contain the COVID crisis. Growth projections have been lowered as state lockdowns remain for longer than expected. For more, Bloomberg's Anirban Nag joins us from Mumbai. Anirban, how did the January to March quarter shape up?
Well, what we saw in the January to March quarter was India was performing rather smartly just before the second deadly virus wave hit home. Now, economists are expecting a second straight quarter of growth of 1% or thereabouts, and this should primarily be on the back of some robust performance in the services and the manufacturing sectors. Then there is also increased government spending, especially subsidies payouts before the end of the financial year, that should lift growth, and all this should see that the government's initial growth estimate of an 8% contraction probably will get revised to a minus 7.5% contraction. Now, that though offers little respite, as you said, as India will be on track for its biggest annual contraction since 1952 and the first one since 1980.
Of course, India dealing with the humanitarian crisis of the second wave of the virus as well. On that front, what can authorities do to help with the economic recovery when it comes to grappling with that reality?
Well, that's a very good question. What we saw was that now the government is slowly but surely stepping up after the second wave seems to have been contained. We saw that the government announced an emergency loan scheme for the aviation sector as well as for hospitals to provide more oxygen, and we can expect more such announcements in the offing in the coming months as sectors like hospitality, autos, and small and medium-scale industries all grapple with a hit to consumption and rising job losses. Now, after Monday's GDP numbers, the spotlight will turn to the RBI, which is the central bank, and which has done most of the heavy lifting from last year. Now, earlier it made pledge to inject more liquidity and ease loan rules for banks, but the pressure is growing on the central bank to provide more moratorium to both retail and industries. Now, that aside, the RBI will probably keep its monetary policy easy when the MPC meets later this week, preferring to set aside stubborn inflationary pressures to focus on growth and the widening output growth.
All right, Anirban, thank you so much for joining us. Live from Mumbai, Bloomberg's Anirban Nag talking to us about GDP expectations. Coming up, on the quest for a baby boom, China will allow couples to have 3 children, relaxing regulations. More on this story next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I believe June is just a price adjustment, and we will see bull markets in July and August. I still believe the bull market is still there, and we will continue to see developments of cryptocurrency. For example, Tether on Tron this year has been experienced explosion growth. We have grown from $100 million to almost $30 billion today. And I believe this year we will continue to grow to $100 billion on Tron network. And our global settlement amount has surpassed PayPal. Right now we are 5 times more than PayPal is doing. Our daily settlement amount is $10 billion, which PayPal is only $2 billion per day. So I definitely have confidence in our industry.
Well, absolutely, but people have been trying to perhaps eat into that confidence. The latest with Haruhiko Kuroda, the Bank of Japan governor. Let's not forget various other financial institutions are looking like they could actually perhaps have been changing their minds on the cryptocurrencies. On top of that, Elon Musk also very, very opaque as to what he's been up to. So all these things must create a, I suppose it might sort of undermine confidence, but it isn't, is it?
Yes, definitely. I believe Elon Musk's concern about the cryptocurrency is legit. Cryptocurrency industry definitely need to find a green solution for cryptocurrency. I definitely have seen a lot of the miner today. They have established an alliance, try to tackle this problem by using green energy rather than coal energy. And also, at the same time, I think people have focused more eyes on POS, which means proof of stake, rather than proof of work, currently using by Bitcoin. Try to reduce the carbon and the energy by 99% and still keep the efficiency. For example, Tron today, we use depots, which is one of the most popular consensus mechanism in cryptocurrency, which we reduce the energy consumption by 99%, but also improve the efficiency by 100 times.
But having said that, Justin, should you be concerned about the warnings from China against crypto mining? I mean, it is part of why it's been so volatile in that space.
Yes, definitely. I think China recent news about crypto is very important, but I want to emphasize on there is no a single person or a factor can control the market. I believe the adjustment of the crypto market, most of the reason is because it has been up for the whole year. I think we need to see some adjustments come in the right time. But I believe even today, China is trying to put more strict regulation on crypto, but still crypto gonna grow in China like most of the country do. Because right now, crypto in China is also has like highly interest tied to the local government, tied to lots of the people's job in China. So I don't think China can crack down like crypto like overnight.
And that was Justin Sun, the founder of Tron, talking crypto. There was, you know, for some time, Danny, there were rumors, even reports in fairly respectable, from fairly respectable news organizations that he was the one who paid $69 million for the NFT in that auction, if you recall. Turns out he wasn't. Yep. And I lost faith for a while in his intelligence, thinking that he actually did that, but it's been regained.
Yeah, but look, the people that are buying up NFT mats, it's a lot of the same kind of crowd that's going to be participating in crypto. I mean, that's what we saw with that Christie's auction.
For sure.
I think that there was this question. Okay, you know, you get the normal art crowd going into NFTs, but I feel like that's not really what we've completely seen. It seems to be kind of the same sorts of people.
No, absolutely, that's true. And I don't have a problem with buying NFTs for $69, but for $69 million, it doesn't make much sense, especially when it's for a piece of digital art that we can all view online. And I don't see how the NFT actually proves your ownership of it or stakes a claim in any way. On the other hand, cryptos, you know, there's long been an argument about the importance of the platform versus the importance of the token. I love the internet computer, the idea, the software behind it, and what they want to do with that. I don't think I necessarily need the internet computer token for any reason, and I can't imagine why it would go up or down in value. So, you know, that's the issue with NFTs as well, I think.
Yeah, exactly. Look, that's actually the exact argument that Ethereum fans make. The Ethereum platform is where decentralized finance is going to go. It's where NFTs are going to trade. It's what GameStop is using to make NFTs, Matt.
In fact, the European Investment Bank used the Ethereum platform to sell its first digital bonds last month, $100 million in digital bonds on Ethereum from the European Union's finance arm. Let's get the Bloomberg Business Flash now. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. China's Huarong has made its biggest bond payment since confidence in its financial health began plunging 2 months ago. Sources tell Bloomberg it wired funds for a $900 million bond due June 3rd. It's adding to signs that Huarong still has access to near-term liquidity. It has yet to miss a payment since it spooked investors by failing to report its annual results on time. Credit Suisse is considering retention bonuses for top performers to keep bankers from jumping ship. In the wake of the Greensill and Archegos scandals, it's also looking to reduce risk. It's cutting ties with SoftBank, a backer to Greensill, and also temporarily barring clients from withdrawing all their cash from a fund that invests with Renaissance Technologies. Qantas is offering unlimited flights for a year as part of a pool of prizes for people who've had COVID-19 shots. It's the biggest incentive yet from an Australian business in a bid to accelerate the country's sluggish vaccine rollout. Previously announced rewards include air miles, flight vouchers, and credits for a loyalty program. That's the Bloomberg Business Flash. Matt, Danny.
Laura Wright in London, thank you so much. Now, turning to one of the breaking stories over the past hour, China will allow all couples to have a third child. That's as the country aims to tackle an aging population and shrinking birth rate. Joining us now to discuss that is Emma O'Brien in Beijing. So, Emma, what exactly is China hoping this will have in terms of the consequences for the long-term economic picture?
Well, I
think it reflects an acknowledgement from them that they are concerned about the population slowdown. We have seen the slowest rate of increase since the 1950s, about 0.5% over the past 5 years in terms of population growth here. Last year, the fewest number of babies were born since 1961 in China. So you've got the Politburo recognizing that and moving on policy. Whether it will have any impact is pretty questionable. They moved in 2016 to allow 2 children, but that hasn't flowed through to people having more than one in the main.
Yeah, you know, that's the issue, Emma. I mean, even if they're allowed to, are kids today going to want to reproduce at the same rate as, you know, our grandparents did? We see this in cultures around the world. It's not just China. People are having fewer babies.
Yeah, I mean, I think it'd be the same in other parts of the world that are slowly more developing. You don't see people having 3 children in the West, even though they're able to, because of the rising costs of having children. And you could argue that in many, particularly Chinese cities, it is extremely expensive to have children. You're talking about the world's biggest pond, in essence, here, and people spend a lot of money on things like extra tutoring, musical classes, extracurricular, that sort of thing. So to be extending that to 3 kids is pretty much unrealistic. And I think that the impact will be pretty similar to when they brought in the 2-child policy.
Yeah, those childcare costs, I'm sure, a story that Matt knows very intimately well at the moment. Emma, thank you so much. Our thanks to Emma O'Brien in Beijing. Now, coming up after one of the largest downside misses on record, this Friday's U.S. job report will tell investors if that labor supply crunch was a one-off, or is it something we're going to have to live with for months to come? We'll have that discussion up next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Open. We are getting close to an hour into the session, and of course, UK markets are closed today. US markets are going to be closed as well for the Memorial Day holiday, but we do see some action here in Europe. The CAC 40 rising in Paris as luxury stocks continue to gain ground. The DAX, on the other hand, down in Frankfurt, losing almost 0.25% right now. Joining us to talk more about the markets is Simon Flint. He's Bloomberg's emerging markets strategist and has a ton of experience. On days like this, Simon, do you expect to see a lot more volatility because of the low volume or just less movement in general?
Normally it's less. It's a particularly bad day in the sense that it's Asia Monday, US and London not open. And then, of course, we've got really important data towards the end of the week with non-farm payrolls. And so, yeah, it's not surprising. It's quiet and lacking in volatility.
Simon, how important is that non-farm payrolls data on Friday? In other words, is it important enough that traders are just going to sit on their hands to see what the actual numbers shape up to be, since there's been so much volatility there?
Yeah, though I think you're right, though. I think people will be waiting to see it. It's so critical for the overall dollar picture. As you know, the dollar's been in this prolonged downtrend. And the thing that could really reverse that is if we could believe that the US employment markets are picking up. And indeed, actually, if you look at the Bloomberg forecast for those numbers, they're considerably more bullish than expected or consensus expects. And so, yeah, it could be quite an exciting Friday, but I do expect this kind of dull market to continue for the next few days.
You know, the question of the day on the MLive blog, how far will the yuan's rally run in 2021? We've seen such strength in the Chinese currency against the dollar, against a basket of currencies over the past months, really over the past couple of years. Has the PBOC made any statements about this? Are they going to finally draw a line in the sand here?
Yeah, so they've said quite a lot in terms of trying to control the strength of the rally. So they've told the market that they don't care about high imported prices, so we shouldn't be buying the yuan if we believe that it should be used as an anti-inflation tool. They've been talking about how they expect the dollar to rebound later on in the year because of the risk of taper. So there's a lot of talk from the PBOC, but the action so far hasn't been significant enough. So even though today's fixing was weaker than expected in yuan terms, we didn't seem to really have any significant follow-up. One would normally expect some kind of state bank intervention to happen in the spot market to help push dollar renminbi upwards, but it doesn't look like that we've got that today. So a lot of talk, but not much action so far.
Simon, we also had that PMI figure come out of China, which I'm sure Matt was watching closely as well. The idea seemed to be that it shows that manufacturing has peaked. Is there any degree that we can use this as a blueprint for other economies, considering China was one of the first to really open up and start to see that growth?
Yeah, to some extent that's true. The global manufacturing sector in general has significantly outpaced services and retail. China was the first to exit the downturn in terms of manufacturing. Manufacturing in China is probably operating above its capacity. That's probably not true yet in most of the rest of the world. So I think what's happening in China will happen.
Simon, got to stop you there. Simon Flint, Bloomberg's emerging market strategist. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is the efforts of Russian government to swallow Belarus as an independent state.
I'll be meeting with President Putin, making it clear that we will not stand by.
China could provide evidence that would be exculpatory here. They've refused to do that.
This is Bloomberg Surveillance, early edition.
Good morning. Welcome to Bloomberg Surveillance, the early edition. I'm Matt Miller in Berlin with Danny Berger in London. Here's what's coming up on today's program. Stocks edge higher, but it's Memorial Day, so trading is restricted. Global stocks remain near a record as the month comes to a close. There are signs that China's recovery may be leveling out, but the news of the morning really in Beijing is that you can now have 3 children there. Plus, Benjamin Netanyahu's opponents edged closer to ousting the legally embattled Israeli leader amid plans to form a unity coalition. All of that and more coming up. I do want to point out we've got headlines crossing from the OECD right now that are pretty exciting. They're raising their global growth forecast to 5.8%. from 5.6%. Now, they do warn that the global economy is improving in a very uneven way. They say the inflation rise, however, will only be temporary with longer-term upside risk. So, Danny, it does look like we get some positive news on the economy now from the OECD.
Yeah, and it's that K-shaped recovery, that narrative playing out yet again. But Matt, really, the issue here, though, is that when you look at, for example, what bond markets do, they don't trade in a vacuum. If we have treasury yields moving higher, you're going to have tightness in other financial conditions. So what do you do if, as the OECD says, the recovery is uneven? How do they battle that? How do central banks play off of each other?
Yeah, no, it's a very difficult issue that they all are forced to deal with, and hopefully this week they'll make it a little easier on each other at the G7 meetings. You mentioned that bonds don't trade in a vacuum. You and I were talking during the break about meme stocks. Do they trade in a vacuum?
Sometimes it feels like it, Matt. I mean, look, okay, let me give you the broad argument for where we theoretically would be with meme stocks. We would have everybody back outside. They're no longer on their computer anymore. So meme stock, that narrative goes away, but it hasn't. AMC trading was absolutely spectacular last week. We had near record volumes. We had record volumes when it came to call options. I mean, it just really begs the question, what's going on here? You know, is this a narrative that's going to last forever, Matt?
Well, AMC to me makes sense because you're going back out into the theaters as the economy reopens. I mean, watching a movie in a theater is one of the main things that I want to do, but I don't want to watch Cruella, and I don't want to watch, actually A Quiet Place, A Very Quiet Place, is that what it was called? The John Krasinski movie? That was really good. So I am looking forward to seeing the second one. But, the big blockbusters aren't coming out until November. We're not going to be able to see Tom Cruise or James Bond until basically next winter.
Yeah, just hold up, not leaving until you can go see Top Gun 2. I get it, Matt. I get it. I'm sure a lot of people are doing the same. Let's go ahead, though, and get a quick check on what markets are doing this morning, because while a lot are closed, you have the UK the U.S. close. You do have U.S. futures trading. We are seeing slight movement to the upside there, very fractional at this point. When it comes to commodities, you've seen iron ore futures gain pretty strongly today. It's kind of a weird day for commodities because we also have LME closed as well, with the rest of London closed. But still, there's enough out there that we have seen a lot of the European sector when it comes to materials move higher as well. Now, China data has been really important for markets as well so far this morning, and we did see a gauge of China's manufacturing industry come in as little changed in May, but at the same time, we had soaring input prices, and that weighed on smaller factories. Now, all that data is coming in as Beijing is also signaling its tolerance for the yuan's rally. That tolerance is fading. Now, authorities set the daily fixing at a weaker than expected level, and state-run newspapers have also warned against rapid gains. But if that's not enough news coming out of China, just breaking this morning, we also had China allowing all couples to have a third child. This is in a bid to arrest an aging population and shrinking birth rate, and that, of course, has been threatening the country's long-term economic prospects. Let's get the details on all of these stories. Let's bring in Emma O'Brien in Beijing from Bloomberg. Emma, let's go ahead and start with that birth rate story. What exactly is the takeaway here with China allowing couples to have more children?
Well, I think most people acknowledge this is probably not going to have a huge impact. We saw them go from the one-child policy to allowing 2 children back in 2016, and that hasn't had a marked impact on birth rates. In fact, we saw the fewest number of babies born last year in something like 60 years here in China. So I think what it does show is a recognition that there is a demographic crisis looming here, that they do need to do something about what is fast becoming a slowing population rate. We're almost in contraction territory with the slowest rate of increase over the past 5 years since the 1950s in population in China. At the same time as they've signaled that shift to allowing 3 children, they are talking about raising the retirement age, which is quite low here, 50 for women in state jobs and 55 in the private sector. So generally a recognition that they need to do something about the demographics here to keep the economy humming along.
Emma, what about the UN? I mean, we've been following it very closely over the past weeks, rising to ever higher levels against the dollar. I think it's a 5-year high against a basket of other currencies. Is China going to allow this appreciation to continue?
Well, I guess all the signs at this stage are that they're being cautious about it, and it's a little bit hard to tell how they're going to play this. It is a reflection of the strength of the economy post-COVID. You've got COVID contained here, and so consumption bouncing back at higher levels than ever before, particularly because of travel curbs stopping people from moving around. So it's one we just need to keep an eye on.
All right, Emma O'Brien, thanks very much for joining us on really a range of issues in China, some directly key for markets right now, some much bigger macro issues. Joining us to talk about FX strategy is John Hardy. He's the head of it for Sachs Bank. And let's start where Emma left off there with the UN. We've been watching these moves incredibly closely. I think the MLive question of the day is, how much room is left in the yuan rally? What do you see, John?
Well, I think there's enough space for it to go another few percent, but you get a pretty clear message when they're already pushing back rhetorically against the pace of the move. You pointed out there was a key high in the official basket that goes back to early 2018. We're right around there, and then before that, that official basket was established when they sort of jiggered their currency policy in 2015 at about 2 or 3% above this current level. So I think they're happy to see it sort of slowly strengthening. It does offset some of the price rises from the commodity prices rising, and they don't need to worry as much about FX strength. And there's so much demand feeding through from the rest of the world, from stimulus, et cetera, on the good side. So they're fine right now, but I would not be looking for a sort of a runaway period of UN strength here.
John, how much of this, though, in terms of the UN strength recently, is about China versus just weakness in the U.S. dollar?
That's a great question, because previously what you tended to see was the Chinese yuan sort of traded in a range and sort of was moved with sort of weak beta to whatever direction the U.S. dollar was going. And recently we've seen this sort of dollar weakness that, the dollar's not strong here, but it's not going anywhere, whereas this is an isolated UN signal. So that fact is what's been new about this cycle here over the last, especially the last week. And I suspect that's why we're seeing the pushback here. Otherwise, I think they'd be happy to see the UN stronger versus the dollar if the dollar was broadly weak. But when the dollar stalled out and the UN is continuing to power forward, that's a bit unusual. So, certainly something we need to track here.
What is your long-term dollar view, John? Longer term. Longer term, especially next year and into next year, definitely lower. I think the next 3 to 6 months, though, is potentially full of pitfalls for traders on both sides. We're dealing with this whole question of the transitoriness or not of inflation and how the Fed navigates that. If it does need to taper, if it does need to indicate that eventually rate hikes come in, the market, is obviously complacent on that front. So rolling out that process could mean a lot of market volatility. That often means a bit of dollar strength. So there could be a period here of turbulence where the dollar sort of manages to make a stand here. But certainly longer term, with the style of stimulus, with the nature of these twin huge external deficits, with the need to address the K-shaped recovery, et cetera, I see the dollar lower longer term for sure.
John, how do you script the UN with other emerging market currencies, especially ones that are benefiting from this very large commodity rally that we've seen?
Yeah, I mean, the EM space has been very strong. A lot of this is created by the incredible distortions we're seeing in markets from the Fed's really excessive QE here. I think that's part of, strong EM is a part of all that. We're seeing these distortions in the massive reverse repo facility, ridiculously compressed credit spreads, et cetera. With commodities doing well, the emerging market currencies are loving this. But again, if we're looking for a period of turbulence, I would suspect we're going to see some two-way action here in the next 3 to 6 months. Again, during this phase of trying to discover where inflation is. If it's not coming, that's also potentially bad for the economic recovery. But if it is coming and it's not transitory, and the need to react to that could also again push back against some of this complacency and lead to market turbulence, which is a bit of a headwind for EM. So risk reward wise, I think EM is not in a great place here.
Right, and we'll certainly dig more into that U.S. story soon. John Hardy, Saxo Bank's head of FX strategy, stays with us. And as I was saying, coming up, one of the largest downside misses on record. This Friday's U.S. job report will tell investors if that labor supply crunch was a one-off or something we'll have to live with for months to come. We're going to discuss that next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shake-up, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Meeting with President Putin in a couple weeks in Geneva, making it clear that we will not stand by and let him abuse those rights.
That was Joe Biden saying he will tell Vladimir Putin the U.S. won't stand by on human rights abuses. The U.S. and Russian presidents are set to meet in Geneva on June 15th and the 16th. Let's go ahead and turn to the U.S., though, and talk about the U.S. labor market. The jobs report due Friday could prove a pivotal moment for investors. That's, of course, after the surprisingly tepid job gains that happened in April. Now, according to a Bloomberg survey, payrolls may have risen by 650,000 in May. That, of course, would be a significant acceleration from the previous very disappointing gain of just 266,000. That month, economists had projected a 1 million hiring spree. It was one of the largest downside misses on record, caught many people, both in the markets and economists, by surprise. Let's get back to John Hardy, Saxo Bank's head of FX strategy. John, with that in mind, already there does seem to be this really big divergence of bets for this Friday. I've seen 350,000, I've seen 1 million. How do you position yourself to gear up for just the big amounts of volatility possible in that number?
Great question. It just seems to me that we've seen the strength, with the opening up, we should be seeing a lot more strength in the services sector. We saw a crazy ISM services reading already for April. I'd expect, things are doing great in the services sector. That's where you see a lot of the jobs coming back, and you have to balance that against two things: the fact that there's still the unemployment benefits available through the beginning of September, but elsewhere we're seeing those benefits being cut off by states that believe that it's encouraging people to not get out and seek work. So, I would lean a little bit towards the positive side on payrolls, but the question to me is still that the market knows that we've sort of seen peak stimulus, and do we see the catch-on effects? Or do we see a slowdown after the stimulus has peaked and into the fall? And I think regardless of what payrolls are, it's a bit of a lagging indicator. So there you have it.
Well, what about the Fed's reaction? I mean, at some point, they've got to stop purchases of $120 billion a month, right? At some point, they've got to taper back a little bit as we see this massive economic growth and, very low unemployment. Their mandate isn't going to support what they're doing.
I agree, and we're seeing the first little warnings of that. So we saw Quarles and Clarida last week sort of indicating, the time is ripe at some point in coming meetings to talk about taper, and especially the MBS side. I think that's the easy one for them to begin tapering purchases of MBS when the U.S. housing market is going wild. But it's very clear that the size of this Fed QE is creating all kinds of distortions, and they're having to sort of lend back out all the treasuries that they're buying. It's it's a bit absurd, really. But then at the same time, the question further down the line, once the Treasury has run down its reserves and is needing to up its issuance, do we get a policy mistake that they cut off the QE just when actually the Treasury is issuing more, and then we have that situation in the fall, and suddenly it puts pressure on longer interest rates. It's a big conundrum. I don't envy the Fed's position here and how they're going to be rolling out this message. I think it'll be a very difficult process. But certainly the June FOMC meeting is very much in play for providing some kind of forward hints, as gentle as they may be.
John, do you think the Fed then is willing to maybe see the end of some of the distortions, as you say, created by QE?
I think they would be happy to. It doesn't really help to have this reverse repo facility ballooning up to what it is. It doesn't necessarily help further down the line if credit spreads become so compressed and the reach for yield becomes so dramatic that it creates its own financial stability risks down the road. All these things that the Fed creating its own sort of batch of problems for the longer run by having provided excess accommodation, especially if inflation proves not to be transitory and they have to do an about face on rates and a much earlier set of rate hikes than they're anticipating at this point in time.
All right, John, thanks so much for joining us. Really appreciate your insight today. John Hardy is the head of FX strategy at Saxo Bank in Copenhagen. Coming up, Israel could have its first new prime minister in 12 years. Benjamin Netanyahu's rule is under threat as his opponents move closer to a deal that would oust him from power. This is Bloomberg.
Friday is Jobs Day on Bloomberg Television. After April payroll numbers hit below estimates, investors look for a rebound in the labor market. The May Jobs Report, Friday morning on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Danny Berger in London. Now, Israeli PM Benjamin Netanyahu's rule is under threat as his opponents move closer to a deal that would oust him from power after years of inconclusive elections. Rival parties are planning a coalition which, although unprecedented, if it works, could form a ruling government. Joining us now is Bloomberg's Simone Foxman. So, Simone, it's shocking, really, the shape this coalition could take. You could have, right-wing politicians joining up with an Arab party.
Yeah, that's right. And it's not just a fractured party with many disagreements. It's also one that would have an extremely narrow majority should it go through. Just 61 seats out of the 120 seats in the Knesset. Now, the differences between these parties are apparent even in the major key players here. One of them is Naftali Bennett. Though his party, Yamina, is a right-wing party, won just 7 seats in March's elections. He does seem to be the spoiler here. He's a former ally of Prime Minister Benjamin Netanyahu, and he's very right-wing, pro-settler group. Yair Lapid is also important. While Naftali Bennett would be the first prime minister for 2 years, Yair Lapid, who actually won more votes in the election, would be prime minister next, but be foreign minister in the interim time. He's more centrist, and he's really been the architect of this coalition, bringing on some of the farther left groups, the labor groups, Meretz. Also, an Islamist Arab party needed to go along with this coalition. Though they just won 4 seats in that election, they're kind of the decider here, and everyone's waiting to see exactly how they turn out.
Simone, how would this impact the government's approach to Israeli-Palestinian relations?
Well, you know, the reason they might join a coalition to begin with would be to advocate for rights, for particularly lifestyles for more conservative Arabs living in Israeli territories, also money for Arab-dominated cities in Israel's north. But generally, when you look across the board of who is in this government, the security cabinet likely to be right-wing, according to reports we're seeing from the Israeli press, and therefore not necessarily a huge difference from what we saw under Netanyahu.
Right, right. Simone, thank you so much. Our thanks to Bloomberg's Simone Foxman. Now, coming up, we get first quarter GDP for India later. We'll discuss the economy as the country grapples with a second wave. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Stocks edge higher, but it's Memorial Day, so trading, of course, is restricted. Global stocks remain near a record as the month comes to a close. There are signs China's recovery may be leveling out, but the news of the morning is Beijing, of course, their plans to allow all couples to have a third child. And Benjamin Netanyahu's opponents edged closer to ousting the legally embattled Israeli leader amid plans to form a unity coalition. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger here in London with Matt Miller in Berlin. Matt, that China story definitely catching our attention this morning with them allowing couples to have a third child. But part of the question, I think, is also just how much of an impact it will have. People already having less children, not just in China, but throughout the world. And they've enacted a policy going from 1 child to 2 children. And that in itself didn't really seem to have much of a difference when they did it at the time.
No, you've definitely hit on the key issue here. I will point out also that the story is fascinating not only to us, but to Bloomberg clients. It quickly became the most read story on the terminal. It's got far-reaching implications if only people would have the amount of children they were allowed to. They're already allowed to have 2, as you point out. They're not even doing that. Just relaxing the regulations isn't going to spur them to decide to change their family planning and all of a sudden have 3. And these aren't issues that only China faces. It's a real problem in Russia. It's a real problem in other economies around the world. There just isn't that push to have big families. It's no longer en vogue. The current, millennials and Gen Z, they're just not doing it. And as a result, it leaves countries, it leaves economies with a huge elderly population and no one to support them.
Yeah, but I guess one of kind of the quick fixes here, I mean, if it can be considered a quick fix, maybe relatively, is immigration, right? If you need a bigger labor force, you let more people into the country. There was also a headline out of the U.S. about relaxing some of those immigration policies as well. Maybe we'll see Europe follow suit. Places that, of course, don't have children, these types of policies coming out of China, that's certainly a lever that they could press as well. Spoken like a true economist, Danny. 100% what we hear from guests, 100% what I hear from, economists and government ministers that I speak to on a regular basis. The problem is with an influx in immigration, you often have a spike in xenophobia. People don't like it when people from other countries come in and start to take jobs. A lot of times they work harder than the people who already live in that country and are resting on their laurels, and it causes huge social problems in some cases, right? That's the issue that we're likely to see if you have increased immigration in the U.S., although hopefully not. Let's take a quick look at what's going on with the data right now. In terms of the trade, as Danny pointed out, you've got a couple of big markets closed, or the UK market is closed, the US market isn't going to open because of the Memorial Day holiday. So you'll see lower volumes, and you may see also less direction. Sometimes lower volumes means more volatility, but sometimes, as Simon Flint has told us over the past couple of hours, it means less movement. Here you see, right at the top, iron ore futures up 5.3% in Singapore. So the commodity story continues to be one of gains. I noticed a second ago that we have Brent crude up more than 1% as well. So things that people need to live or to manufacture in a lot of cases are just getting more expensive, and they're going to have to try and pass those costs on. The question is that going to be transitory? The stock 600 is little changed right now, but we do have some fluctuations in European markets with the DAX falling and the CAC 40 rising. So you do see a little bit of volatility here if you look at it on a national level.
10-year bond futures down a little bit. You could see yields rise when they open up for the live trade, and S&P futures are up a little bit. So maybe you see a little bit of growth there on Tuesday when they open for the first time. India looks set to grow at the world's fastest rate despite a devastating COVID-19 outbreak. A Bloomberg News survey says the South Asian economy is on track to grow 10% in the year that began on April 1st. That's even after several economists downgraded their forecast in recent weeks. Very few doubt India's strong potential to pull off, though, such a fast-paced rebound. Joining us now from New Delhi is Bloomberg's South Asia economy and government reporter Vrishti Beniwal. Vrishti, why would economists be cutting their expectations when we see the reopening around the world and the strength that it's showing? And now you look at an India economy that just starts on April 1st, right? It's not like the year starting January, so you've got so much more time for the rebound.
So first, I'll talk about the data which is expected today. That is for January-March quarter. So it's backward-looking data, and that might show you that the economy is recovering. It is exiting the recession that we saw last year after seeing a second consecutive quarter of expansion. But we should not forget that this data is for the period when a second wave of coronavirus infections hit India. It's data before that, and that's why we are seeing an expansion. It will reflect all the demand that was coming back when people were buying everything from mobile phones to cars, and that boosted consumption in India's economy after the world's biggest lockdown last year. Coming back to how the economy is doing now and why these economists are cutting their forecast, that's because of the second wave. No one saw this coming in India. The government didn't see this coming. So there has been, a sharp increase in the number of cases and the number of deaths we are seeing in India, and that is why economists are lowering their forecast for the year.
Obviously, the government is in a very difficult situation here when it comes to possible restrictions to help curb growth in cases versus trying to revive demand after lockdowns. What do we see the government doing at this moment?
So we have seen many state governments in India going for lockdowns this time. The federal government didn't do that. Prime Minister Modi said we are not going for a national lockdown like last year. But state governments had to do it. They didn't have an option when the cases started rising. And as far as the measures are concerned, those are expected from the central government. Finance Minister Nirmala Sitharaman, in an interview to a newspaper today, said she is open to taking more measures if needed. On the weekend, we saw some measures coming from the government and from the banks, where they have extended an emergency credit program to airlines and hospitals, which was one of the most badly affected segments because of the rise in infections. So more measures could be expected, but having said that, the government doesn't have too much of a room to give a fiscal stimulus after they gave a big stimulus last year. Then there is central banks which could be taking some measures, and it has done so far. It has taken a lot of measures so far in the last 1 year, be it lowering rates or providing liquidity. But now, because of rising inflation, even the central bank doesn't have much room. It's expected to decide on monetary policy later this week, and we are expecting a status quo as far as interest rates are concerned.
All right, well, we'll certainly keep an eye out for that GDP data at 1 p.m. UK time. Vrishti, thank you so much. Vrishti Beniwal, Bloomberg South Asia economic and government reporter. Let's see what else is on the move today. Let's go ahead and go to the Bloomberg First Word News with Laura Wright. Good morning, Laura.
Thanks, Danny. President Joe Biden is pledging to raise the issue of human rights during his meeting with Russian President Vladimir Putin next month. The leaders are set to meet at a fraught time for relations between the two sides. The U.S. has blamed Russian-based hackers for recent cyber attacks, but Biden stopped short of directly implicating the Kremlin. Opponents of Israeli Prime Minister Benjamin Netanyahu are moving closer to ousting him. Former ally turned rival Naftali Bennett is working with an ex-finance minister to unseat the nation's longest-serving premier. It comes after 4 elections in around 2 years failed to break the deadlock in Israeli politics. US experts are warning the world has to find the origins of the COVID-19 pandemic to help prevent future pandemics. The precise origins of the virus remain unclear. Scientists say it most likely spread from wild animals to humans, but the theory it escaped from a research lab is gaining traction.
The side of the ledger that suggests that this could have come out of a lab has continued to expand. And the side of the ledger that suggests that this could have come from a zoonotic source, come out of nature, really hasn't budged. China could provide evidence that would be exculpatory here. They could provide the blood samples from those who worked in the lab in Wuhan. They've refused to do that.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Danny.
Laura, thanks very much. Laura right there with your first word news. Now coming up, the summer season looms large as economies begin opening up. International travel looks set to get a big boost. Bloomberg's Simone Foxman caught up with Qatar Airways CEO Akbar Al-Bakr and got his views on the state of aviation. We'll have that exciting interview next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Matt Miller in Berlin. Now, Qatar Airways CEO Akbar Al-Bakr has lashed out at Airbus for the second time this month, this time warning his airline might stop taking deliveries from the French plane maker this year over an unspecified serious issue. Those cryptic comments came during an exclusive interview with Bloomberg's Simone Foxman.
We are a state-owned company. Our government injected $3 billion into our equity.
$3 billion.
$3 billion because we were burning cash. But keep in mind that there is not a single airline in the world who has not gone to their government for help. but they have gone for their government for help.
You went to Airbus and Boeing and asked for deferred deliveries of various aircraft. Are you taking any deliveries this year?
Yes, we are. We are taking deliveries from Boeing, and we are earmarked to take deliveries from Airbus. We have an issue with Airbus that we need to settle, and if we are not able to settle that serious issue we have with them, we will refuse to take any aircraft from them until our issues with them is resolved.
Okay, so which aircraft?
I unfortunately cannot tell you what that issue is, but it is a serious issue which we need them to address, or Qatar Airways will not take any deliveries from them.
Does it have to do with the A380s?
No, that has nothing to do with relation with Airbus. That is already for us water under the bridge. What is important for us is our future relationship with them. They need to know that we are a very serious and a very important player. They should know that affecting our relationship with them will cause them a stress in the relationship with IAG, with LATAM, with other airlines in which we have shareholding.
Let's talk Boeing. The 777X is hotly anticipated. You said you're not going to be the launch customer.
We are the launch customer.
You are the launch customer?
Yes.
Okay.
And we are looking forward to receiving them.
What's the timing exactly?
Boeing has delayed the deliveries until 2023.
Okay.
And we are fine. If they can deliver it to us in 2022, we will accept them.
Okay.
The only problem we have is there is a stress in the supply chain for the entire aviation industry. And I hope that that will be resolved by the time we are due to receive our 777X.
Emirates' Tim Clark has bashed the 777X. What's his why?
He has his opinions. I have mine. And I think my opinion in the industry matters more than his opinion. I'm still not due to retire.
What is your outlook in terms of M&A over the next 18, 24 months? When do you think it will be a good time, perhaps?
It is difficult to say because there is no resolution to the pandemic. You know, there are waves and waves of infections happening. There are spikes in certain regions. You know, Australia thought that they had completely eradicated, and now suddenly Melbourne is under lockdown. So it is so, what is the right word, unpredictable, that we don't know how to plan what we will do from year to next.
And that was Qatar Airways CEO Akbar Al-Bakr speaking exclusively to Simone Foxman. Al-Bakr and other key figures in the airline industry, maybe not as key as Al-Bakr, will tell us more about what the aviation players can expect at the Qatar Economic Forum, powered by Bloomberg. The three-day virtual event will feature heads of state and top CEOs from around the world. It kicks off on June 21st, so make sure you stay tuned for coverage. Now, oil is advancing with the market focused on an OPEC Plus supply policy meeting earlier this week. And any commentary around the prospect for returning Iranian supply will be key to watch for. Joining us to discuss is Bloomberg's Anthony DiPaola. Anthony, set us up with what we should be expecting from this meeting.
Hi, good morning, good afternoon, Matt. The expectation is that OPEC Plus will continue with their policy of easing oil back into the market. They had decided to add about 2 million barrels back into the market over a period of months. So they've got something a little bit shy of 1 million barrels that they plan to start adding back in July. And the expectation is that they will continue to move ahead with this, that there aren't any reasons out there in terms of pandemic issues or other lockdowns that would stop them from doing that. What will be interesting to see is their outlook going forward, beyond that July increase. They do have plans to bring the rest of the crude oil that they took off the market in the wake of the pandemic back to customers. So we'll want to see what is the schedule for them bringing that oil back to the market and how they see oil in the second half, whether they see enough demand, how they're going to react to the potential return of Iran. These are the issues that we'll be watching for, Matt.
Anthony, do those stunning defeats from Exxon, Shell, Chevron last week in terms of pulling back on fossil fuel, does that change the calculus at all here?
The OPEC countries have for a while now been talking about lack of investment in oil, and for their part, many of those OPEC countries, the richer ones here where I'm sitting in Saudi Arabia and the UAE, they are going ahead with investment and putting up some big numbers to keep their fields going. So there's kind of two stories there. The international oil companies having to pull back on exploration budgets because of climate change issues, because of the drop in demand, whereas the national oil companies here are seeing the market window for them selling their oil. They're seeing that narrow, really, as the globe transitions to a cleaner economy. So they want to continue investing, get that oil out of the ground and sell it. So that does create some opportunity for them. And a lot of the analysis points to a tightness in the market towards the middle of this decade, which might be an opportunity for them, Danny.
Anthony, I'm afraid we're going to have to leave it there. Thanks so much to Bloomberg's Anthony DePaulo. I also want to give us a quick headline that's just crossing the terminal. China PBOC raising Forex reserve requirement ratio by 2 percentage points. This, of course, is going to impact the yuan that's been strengthening, something China has been trying to combat. The gut punch reaction here does seem to be one of a weaker yuan, trading around 6.36 when it comes to the offshore at the moment. That's what you're looking at on your screen. So a development we'll keep watching along with all the other headlines coming out of China. Also going to talk about coming up after one of the largest downside misses on record. This Friday's U.S. jobs report will tell investors if the labor supply crunch was a one-off, or is it something we're going to have to live with for months to come? We're going to discuss the week ahead next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Okay, traders, hello. Are you ready to place another order? I'm looking to sell short Japanese yen, and the price I'm looking to sell 109,722. Okay, 109,722. It means we will have two positions. One, as you can see here, long position, and another one, position, short position. So if you start trading, if you know our strategy, please do so. Please copy this trade. If you don't know the strategy, you need to go to company.co.uk and find out how we do arbitrage. If and when this position will be open, it will be arbitrage. So we'll have two positions, one short, one long, and I'll show you how to trade. For more information, you need to go to company.co.uk and to get the strategy, because you really need to know how to do this. If you still want to follow the trade, you need to learn money management. You need to know how much you need to spend for your contract, for position that you will open. This way you will not lose any money, okay? Stay safe, and I'll speak to you later.
Trying to combat the strength that we've seen in the yuan. You can see here the initial reaction is a little bit of a weakening, but not too much, from 63.5 to 63.6. And we're talking about a yuan, a Chinese currency that's at a 5-year high against a basket of other currencies. It's at a multi-year high against the US dollar. So it looks like they're really going to try and take some decisive action to stop the gains.
Right, and you know, when we were talking to John Hardy earlier, he was saying, look, a lot of this is about the dollar. So it's kind of a question as to how much impact can China have, especially considering they were having less of an interventionist type approach. Well, here we clearly see, at least slightly, they can have an impact.
Yeah, absolutely. So it'll be fascinating to watch. The dollar side, of course, is one that we are very focused on as well. Let's take a look at your week ahead. What should you be watching? OPEC Plus countries meet tomorrow to review their oil production plans. And this could be the big one, folks, after a couple of canceled meetings. Keep an eye out for also a policy decision from the Reserve Bank of Australia. Wednesday sees the start of the St. Petersburg International Economic Forum's PEEF. Jumping ahead to Friday, the G7 finance ministers and central bank chiefs will meet in London. Also watch out for a rate decision from India's central bank. And if you feel like it, check out the jobs number as well. Plenty more to come from our Memorial Day coverage. This is
traffic. Okay. During the pandemic, no traffic at all. Okay. Where do you see the oil market in about 20 years or so? Non-existent.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
Okay, guys, we got to cancel order to sell short Japanese yen. As you can see, that basically moved too far. And it's not much point right now to hold. Let's wait until the end of this, when this candlestick will end. We will see if it's worth it to hold. Regarding Bitcoin, we need to cancel this order as well because it moved, as you can see, far away from the order that we wanted to buy. So order to buy Bitcoin canceled as well. Okay, let's see what's happened with Japanese yen. And it still wants to move up. For time being, let's cancel this order. Let's see what's going to happen next. So order to sell short Japanese yen canceled. For more information on how we trade, please go to company.co.uk. You'll find the strategy and you will get webinar as well if you want to. We'll provide webinar, 15 minutes. We'll provide as well a one-on-one trading session. So if you're interested in becoming day trader or as a part-time day trader, follow our trades and we will show you how we trade and how to day trade. I'll speak to you later, guys.
Joins us. She's back with more on today's market action, Danny. And there is little action in terms of what we would normally see on a Monday morning, but if you search, you find pockets of it, right?
Yeah, absolutely. And you know, if anything, it's a blessing in disguise because it leaves us more room to focus on some of these stories that maybe we don't always. Of course, the yuan, the strength there has been one we've been focusing on. And a lot of these questions revolved around what China can do and what they will do to combat some of the strength there versus the dollar. So just moments ago, announcing that they're raising the RRR, the reserve ratio requirement by 2 percentage points. So I'll show you the reaction shortly. But in the China session, we had slightly higher, about 0.2% when it came to stocks there. Elsewhere, a bit of a mixed picture. We had economic data coming out of India, first quarter GDP. That's expected to remain strong, of course, despite the humanitarian crisis they're facing with coronavirus. Now, let me go ahead and show you what the yuan is doing. I think we have the offshore price for us, and indeed we do. So we see a slight spike higher. So this is a little bit more weakness from the yuan when we get that announcement over the RRR there. It's come down slightly, so not a huge reaction. Of course, the question does remain and will continue to remain, how interventionist does China want to be? So far, they've sided to not go very far when it comes to jawboning, just some talk around the strength there. Let me go ahead and show you what Europe is doing. Keep in mind, the UK is closed. The US is closed. So when it comes to these markets, we're not going to get much of a signal from the cash market trading when it does open in the US. So UK, ignore that here. That's closed. Elsewhere, it's pretty uneven. You have the DAX lower by 0.2%. You have the CAC Aron higher by about 0.1%. Spain is also a bit lower, down by 0.2%. And within this, we definitely see some divergence in terms of sectors. Bond proxies not doing very well. Materials doing better. So let me go ahead and show you the more macro board, because we have seen things like oil gain steam ahead of tomorrow's OPEC Plus meeting. Iron ore futures are also stronger as well. So despite the fact that the LME is closed, we still have a lot of the commodity complex that is trading moving higher. Will this reignite inflation concerns, or is everybody enjoying a holiday so they don't care about the materials complex? Well, at least for now, it's having a very slight impact on Europe, just down 5 basis points. You have a U.S. 10-year bond future that's moving lower, and you have U.S. futures, which are unchanged. So look, if you don't want to miss out on any volatility, you still want to stick around for today and look and trade the futures market, Matt, because that, of course, doesn't close even when the cash market's closed.
Yeah, absolutely. Not everyone is enjoying this holiday. I know we have a team of producers awake in New York. It's only 5:03 a.m., and Amy Rosen is awake on a Memorial Day. It doesn't make any sense. She should be sleeping deeply and looking forward to a barbecue later on. You know, even though we don't have the action of the U.S. markets opening up later today, we've had some fascinating news. Not only the OECD raising its forecasts and the RRR requirement in China, Danny, but we've also had this child reproduction policy loosened a little bit. It used to be you could only have 2 kids in China. That was the rule. Now they're saying you can have 3, and that would be great news if it weren't for the fact that people there aren't really reproducing that much anyway, are they?
Yeah, exactly. Look, this isn't a China-specific problem, and I think that just goes to show that they have a really steep road ahead, because despite what the policy is, we see globally that people just aren't having as many kids. So sure, you can raise the policy, you can allow people to have 3 kids instead of 2, but you know, people don't necessarily make their family plans dependent on that. And look, when China changed the policy from 1 child to 2 children, that in itself didn't really change the demographics that much. So it's a very tough decision, but this, of course, one of probably a few things that China's looking at, including raising the retirement age, Matt.
Yeah, absolutely. All right, very interesting stuff. Danny, thanks so much for your market insight there. I want to get over right now to my old friend Leanne Gerrans, who's in London with a look at the First Word News. Leanne?
Matt, good morning and thank you. As you did mention, the OECD has raised its global GDP forecast for this year, but the Paris-based group warns that the recovery will be uneven and that living standards for some people won't return to pre-pandemic levels for an extended period. The new forecast calls for a 5.8% growth in 2021, up 0.2 percentage point from the last outlook. Now, Israeli Prime Minister Benjamin Netanyahu faces what may be his most serious political threat as of yet. An ultra-nationalist politician says his party will work with opposition leaders to form a new government that would force Netanyahu out. The Prime Minister calls that government a fraud. Israel has held 4 inconclusive elections in just 2 years. And as Matt and Danny were speaking about a little bit earlier, China will now allow couples to have a 3rd child. It is an attempt to help the shrinking birth rate and aging population that are threats to the country's long-term economic prospects. For many years, China limited most families to having only a single child. That policy was indeed relaxed back in 2016. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Back to my old friend, Matt.
Leanne, thanks very much. Now, coming up, as Leanne was just saying, the OECD out with its semi-annual economic outlook, raising its 2021 global growth forecasts, but warning of an uneven global recovery. Will speak with the Secretary General himself. Angel Gurria joins us next. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The OECD coming out with its latest economic outlook today, saying there is reason to be hopeful. The outlook is improving. The projection is that global output will rise by nearly 6% this year after the 3.5% contraction last year. But they caution that while the recovery will bring most of the world back to pre-pandemic GDP levels by the end of 2022, the recovery will be an uneven one. For more details, I want to bring in the OECD Secretary General, Angel Gurria. Ms. Secretary General, thank you so much for your time today. Certainly fascinating report and forecast that you brought out this morning. Talk to us first about the rebounding growth. How stable is this rebound?
We feel it's pretty solid, it's pretty robust, but it depends crucially on whether we can keep up the rhythm of vaccination. It's vaccination, vaccination, vaccination. That is going to define how robust the recovery is. And the other question is it going to be vaccination only for the wealthiest countries, or are we going to generalize it? We need a very important effort to be able to get vaccines into the arms of people in developing and emerging economies. Without that, we won't be able to say that we've overcome the crisis.
Yeah, the wealthiest countries are going to be looking at 60, 70% coverage in the next weeks and months. I mean, they're well on the way to done. How long is it going to take developing nations to get to that kind of vaccination coverage?
The answer is how smart and how generous the developed countries will be. If they are smart and generous, and that means that it's the same. Being smart means being generous means smart. Then we should fund mechanisms like COVAX. We should get only a fraction of the trillions that have been thrown at the virus. Just a fraction of that will do the trick. You can vaccinate everybody in the developing world with between 50 and 100 billion, whereas upwards of 16 trillion have been dedicated to fighting the virus. So only a fraction will do it.
What kind of, we know that there's going to be an uneven recovery because of this discrepancy in the vaccination paces. And in fact, some developing nations are going to take years to catch up to the levels the EU and the US are looking at right now. What are the risks of such an uneven recovery?
The risk is that, now it's become almost a cliche to say that nobody's safe until everybody's safe. And also because the enemy is mutating. The enemy has variants. It's changing its shape, its DNA, and therefore we should not allow it to do just that. We should try to beat it as early as possible. And by the way, it's a false dilemma to say that we should balance the economy, the lives and the livelihoods and the the question of health and the question of the economy. Clearly, the very obvious choice is get the virus, kill the virus, beat the virus first, and then because the virus is having immediate consequences on the economic side, on the social side,
right?
And those will stop the moment we stop the virus.
But then we've got to deal with the economic inequality created by this uneven recovery. Do central banks, do governments have the tools to deal with such disparities?
Yes, and the secret is don't give up those stimulus now. Central banks are doing a great job, and they should continue to do their great job. And also the ministers of finance, they are spending, and they are now in a more targeted way, but they should continue to support, all the millions of SMEs, the tourism sector, all the hospitality sector, the areas that have been hit hardest, and the people who, the millions, the tens of millions who have lost their jobs and who are now supported by the governments, and that has been crucial. That has been crucial to keep it going until there can be public policies that can skill, reskill, upskill the workforce.
You mentioned in your forecast inflation, and you say that you think it's going to be transitory, although the risks are to the upside. How concerned are you about the possibility of lingering inflation?
This is not the time to worry about inflation, although one should always keep it in the back of our minds, just like it's not the time to worry about debt. Why? Because the enemy's still there. The difference between the 2008-2009 crisis and today is that then we knew how much it would cost. The decision was whether you would be willing to pay the price. Today, the price is going on. It's still escalating every day, but it's going to get higher the longer we take to address the plight of developing and emerging economies. So basically, let's get on with it.
You're getting on with it at the OECD, Mr. Secretary General, handing the reins over to Matthias Cormann June 1st, tomorrow. I have to say, it's been a pleasure interviewing all these years, and I hope we continue to get you on our airwaves. But I want to ask,
thank you.
How prepared the OECD is, how optimistic you are for the future under Cormann.
Well, the OECD was ready when the crisis of 2008-2009 came, and the OECD was ready when the pandemic struck. Ready in the sense that we took that as an opportunity to help our member countries and our partner countries throughout the world in order to overcome the crisis. In the pandemic, for example, we have more than 200 specific policy briefs about everything that we do, and the COVID, for education and the COVID, and the health and the COVID, and the SMEs and the COVID, and the tourism and the COVID, et cetera, et cetera. More than 200 policy briefs with recommendations, with suggestions, with descriptions. And at the same time, we're also working with developing countries so that they can not only share in this recovery that we're seeing now, but also catch up with the more developed countries in terms of things like vaccination, but also the strengthening of their health systems in general.
Well, it's incredibly important work that you're doing, that you've done, and your achievements have been impressive. So we appreciate you joining us. OECD Secretary General Angel Gurria talking to us as he prepares to pass the reins over to a new Secretary General, Matthias Cormann, tomorrow. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is buy.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to Bloomberg Markets, and happy Memorial Day for those of you in the U.S. Hopefully you're asleep, so you're not hearing this, but we've got a whole team of producers and directors awake in New York on this holiday doing what's got to be done. The show must go on. Let's take a look at what's going on in terms of trading here. The U.S. and U.K. markets are closed, but you can still see S&P futures look at S&P futures for an indication as to what's going to happen tomorrow. You're really not getting much there, are you? 0.03% is the gain. Not a lot of movement. In Europe, we do see some movement. We see the DAX down about 0.25%, and the CAC gaining. So you got banks weighing on the DAX index in Frankfurt. The Parisian CAC 40 is up as luxury stocks put up some big gains. We've been hearing about that today. Louis Vuitton, Hermes, doing quite well. Big margins, like Ferrari level margins, but since they don't emit any carbon, they are trading at even higher valuations. Brent crude, speaking of carbon, up more than 1%. So we see gains for oil, almost $70 a barrel for the global benchmark. Now it's time for your Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. For that, we go back over to London and Leanne Gerrans. Good morning, Leanne.
Good morning, Matt, and thank you. Shares of Chinese food delivery giant Meituan rose more than 10%. The company unveiled better than expected quarterly results. It has also detailed plans to address government concerns about its business practices. The Chinese government has been carrying out an antitrust investigation. Now, Goldman Sachs plans to double its real estate investment in Japan. Bloomberg has learned that Goldman will increase investment to about $2.3 billion a year. The firm will focus on logistics facilities, data centers, and properties offloaded by corporate owners. And French investigators are in Beirut to interrogate Carlos Ghosn. The former chairman of Renault, Nissan, and Mitsubishi has lived in Lebanon since his dramatic escape from Japan a year and a half ago. That was to escape trial. French authorities have accused Ghosn of siphoning Renault funds to pay for a yacht and for his wife's birthday party. And that's your Bloomberg Business Flash. Back to you, Matt.
All right, Leanne, thanks very much. Now, coming up, a big week for data. We're going to digest the figures out of China and talk about what it means for the markets with Frederic Ducrozet, global strategist at Pictet Wealth Management. So much out of China and so much to come out of the U.S. that could really move markets. So it'll be fascinating to get his thoughts. Next, this is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
personally feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Matt Miller. Welcome to Bloomberg Markets on this Memorial Day holiday in the United States. No trading there, no trading in the UK either because of a bank holiday. It's a holiday for no reason. They just call it a bank holiday. I guess it doesn't matter if they put a reason to it or not, but it would be fun if they would pick out a reason for each holiday that they have. However, that's not how the British do it. Let's get over to Leanne Gerrans right now. She's got a look at our first word news. Leanne?
Good morning, Matt, and thank you. Iran and global powers have begun the latest round of talks to revive the 2015 nuclear agreement. Russia's envoy to the discussions in Vienna says there's an understanding the current round should be the very last one. Iran does want the U.S. to lift sanctions if it agrees to again follow those terms of that deal. Now, President Biden plans to tell Vladimir Putin the U.S. will not stand by and let Russia abuse human rights. The leaders are set to meet on June the 15th and 16th. Speaking in Delaware, the president said he also has told Chinese President Xi Jinping that the U.S. doesn't tolerate human rights abuses. And here in the UK, it was a stealth wedding for British Prime Minister Boris Johnson, who married his fiancée Carrie Simons in secrecy at London's main Catholic cathedral. That was on Saturday. The British press had recently reported that the couple had sent friends save-the-date cards for a wedding next summer. Johnson is the first British Prime Minister to be married in office since way back in 1822. Matt, back to you.
What do you make? I mean, I know you've got an opinion. So what do you make of the dress? Have you seen the ring? Was it a nice ceremony?
So what I make of the dress, what a gorgeous dress. I thought it was a lovely,
I think so too,
conservative dress. I really liked that dress. And she had no shoes on. And I think that's great because one thing, if I ever get married, I've always said I'll never wear a pair of shoes. So I really liked that. And I liked the crown of flowers she had around her head. I thought it was quite chic, actually. And as I said, I think it's about 200 years since a prime minister's been married in office, if my maths is right, from 1822, Matt.
I have to agree with you 100%. I think the dress was gorgeous. If I were to get married, I wouldn't wear shoes either, certainly not high heels if I were a woman. And I love the crown of flowers. It really reminded me of a Braveheart thing, which is a little bit ironic since it's a British politician that she's marrying. But very nicely done, and I'm sure Westminster, I love to go to church at Westminster. It's just such an incredible historical place, so I'm sure it was.
We'll have to go together next time you come here, Matt. We'll have to go to church with our flower crowns on, I hope.
Right, well, is that a proposal? Are you?
No, you're... I'm not proposing live on TV. Let's not even go there.
Okay, got it. All right, well, Leanne, thank you very much. We'll talk after. We'll chat in real time. It's an important week for data right now. The U.S. jobs report is coming on Friday. We've had figures out from China this morning. The manufacturing PMI, little changed in May as soaring input prices weighed on smaller factories, but still good numbers in the PMI. Let's bring in Frederic Ducrozet, global strategist at Pictet Wealth Management. So really a ton of data out of China and a ton to come out of the U.S., Frederic. What do you make of the recovery, the rebound?
Well, in the end, the big picture has been unchanged for quite some time. It's quite a supportive environment for the global cycle, even in China, as you just said, where there's been quite a lot of actually policy tightening on the monetary and fiscal front, and yet we have PMI broadly stable, the services PMI improving even a bit this month, so that's pretty good news. And I think another reason why global markets are holding up so well in the face of a Chinese slowdown, because when you look at the credit impulse, for instance, in China, it's going down, could even turn negative this year, is that this time is really different. It's the obvious take, but it's also a very relevant one for two main reasons, I think. First, because China is no longer the main driver of the global cycle, I think, with the US providing the bulk of the stimulus worldwide. And also because let's never forget that on a more structural basis, the balance sheets of households, of corporates around the world are in a much better shape than 10 or 15 years ago. I think this provides a welcome impetus for better growth prospects this year and into next year as well.
When you look at the central bank's reaction that we've seen, certainly in here in Europe and in the U.S., the Federal Reserve continues to purchase assets, continues to loosen policy in any way that they can. How long is that going to go on?
Well, there's a lot of noise in the data first, and I think that's something very important to state, to repeat. We have to look through the volatility from base effect to the reopening. The example of the CPI inflation is, I think, the most obvious one because prices are going all over the place. We don't know what the real underlying pace of inflation is. And as it stands, the Fed in the US, the ECB in the euro area have to wait and see what happens. So that's one thing. First, patience is absolutely required. And then I think indeed you're rightly pointing out the sensitivity of markets to the talking about tapering at some point later this year. This is something that has been digested very well, in my view, by the bond market in particular. Look at the 10-year in the US, not today, the market is closed, but you see stability. Nowhere you see any level of volatility compared with the bond tantrum, for instance, the taper tantrum in 2013. Again, good news. I think eventually, if and when the Fed pulls the trigger, if and when the ECB starts to also thinking about tapering the PEP.
Are we going to see stability in inflation, Frederick? Because the companies that I talk to are raising prices because of higher input costs, and they're padding margins, and those price hikes aren't likely to be cut next year.
Absolutely. As I said, there's a lot of noise everywhere. We can't even measure the underlying pace of inflation. The headline numbers are very high right now, the base effect in full swings. I like to keep it simple, and the rule of thumb that I would have is 1, 2, 3. 3 is around the headline inflation level that we have in the US right now on average, so it's probably a bit hotter than usual, but not 5 or 6%. 2 is actually the underlying, in my view, real rate of inflation in the US. You look at trimmed mean, you look at excluding the COVID sensitive items, you are around 2%. And 1 is the underlying pace of inflation in Europe. And that's when we are about to reopen the economy. So for sure, there will be some reacceleration, and that's good news as well, I think, in terms of the central banks finally meeting their mandate at some point, maybe next year or in 2023. But we are far away. It's still a long shot from anything that would threaten their credibility and hike and force them to tighten monetary policy effectively.
What do you make of the reverse repo action that we saw last week? I mean, $430, $450, $490 billion each night being held in that facility at 0% interest by dozens and dozens of banks. Why is there so much cash out there?
Yeah, well, we made this joke on Twitter last week. Wait until the US hears about the ECB. When you park your liquidity at the ECB, 3 trillion euros, it's actually at minus 50 basis points. So 0 is actually not that bad as a situation overall. But joke aside, the same story as everywhere else in markets. There is a huge load of liquidity that has to be parked somewhere, including at the Fed, where this reverse repo facility is quite new, actually, and they are learning by doing in terms of what the implication there is for short rates. Let's not forget that the Treasury General Accounts provided also a huge quantity of liquidity into the market. And what I think is interesting from all this is that a lot of this money has been used by fund managers, pension funds, to buy the long end of the curve, where obviously the interest rate is still higher at 1.5, 1.6%. So to me, we are learning by doing and actually getting closer to some sort of more stable equilibrium that is not as bad and frankly quite manageable for the Fed at this stage, I think.
I will say, Frederick, that on Twitter, I follow mostly MotoGP pilots, Formula One racers, car manufacturers, and motorcycle manufacturers almost exclusively. You're one of the very few finance professionals who I follow on Twitter. So I will recommend to our viewers as well. Follow Frederick de Crouzet. He's great on Twitter. His handle is, I think, FWRED, right? At FWRED.
Don't ask me why, but that's correct. Thank you, Matt.
Well, FW Red, thanks very much for joining us. Frederick de Crouzet, global strategist at Pictet Wealth Management. Coming up, we are going to give you more on what to expect from these markets out of low volume and maybe a little bit more volatility. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Oil advancing in Asian trading with the market focused on an OPEC plus supply policy meeting later this week. Joining us with the latest is Bloomberg's Simone Foxman. Simone?
Yeah, OPEC Plus expected to meet tomorrow. And the big question here is, will they continue with a three-part plan to return 2 million barrels per day of oil to the market? 840,000 barrels a day are expected to be returned to the market as part of this plan. So analysts wondering whether or not they're going to stick with the program. 20 out of 24 economists polled by Bloomberg do believe that's the case. So aside from continuing with this plan, the question then becomes comments around the rest of the year. What do these oil ministers see for the second half? How are they pricing in the pandemic recovery? Do they think it will continue on strong? And will it offset the potential for more oil to come on board from Iran? The Iranian oil minister telling reporters today that he wants to ramp up production to 6.5 million barrels per day. That's not what we're hearing across the street. City saying expect something like 500,000 barrels a day by July, maybe 700,000 barrels a day by the end of the year. And what they're saying is that mid-$70s a barrel oil prices, because we're going to see that Iranian crude offset by a higher economic pace of growth at the end of this year.
All right, Simone, thanks very much. Simone Foxman there with a look at what's going on in oil. We're going to get a little deeper right now with Amrita Sen, Energy Aspects Chief Oil Analyst. Amrita, thanks very much for joining us. What do you expect to come out of this meeting?
Yeah, thanks for having me. I think we are expecting them to, OPEC, that is OPEC Plus, to carry on with their planned production increase. So they've got about 800, just above 800,000 barrels per day more to come, about 840,000 for July. But then we expect them to hold to see what Iran brings back, if there is a deal at all, which we do expect, a deal between the U.S. and Iran, and the timelines associated with that. Even the noises out of Russia suggest that there's no rush to add barrels beyond the July increase. So I think that's going to be the main thing to discuss, that, you know, should they wait for a couple of months? Should they still go ahead every month? That's what we understand, that they will still meet monthly and then decide that should Iran get delayed, they have the flexibility to bring on more barrels, even though in theory, after they reach phase 3, which is what they will after the July increase, they should be holding this production through to March 2022.
How much can Iran, first of all, how much is Iran actually putting into the market right now? Is it zero, or are they getting any through? And second, how much can Iran, if allowed, possibly provide in terms of supply?
They are already smuggling a fair bit into China, although, you know, the recent regulatory changes in China have ended up kind of throttling some of that back, because the smaller independent refineries who buy Iranian crude are under scrutiny. However, they're still getting 700 to 1 million barrels per day into the market. We think Iranian production, which is about 2.4 million barrels per day, will climb to about 3.4 by the end of the year. That's for crude only. Once sanction relief is there. Condensate is another chunky 600,000 right now. That can go up to 700. The total crude plus condensate is going to be about 4.2 million barrels per day by year end. So basically, from now, if whatever they're producing now, let's say, they can add another 1.1 million, 1.2 by year end. But that's assuming sanctions relief pretty soon, or at least a deal pretty soon, and sanctions relief 2 months down the line.
Amrita, what kind of demand developments can we expect amidst the reopening? Are we going to see a real bounce back here?
I think we are expected to see a real bounce back. If you look at where things are headed right now, demand is looking very, very solid, especially in the U.S. And in Europe as well. Vaccination rates are very high, so I think that really helps. However, I will caution that Asia still wants zero case counts, and as a result of that, you are likely to see very, very slow reopening in that part of the world.
All right. Amrita, thanks very much. Amrita Sen there from Energy Aspects. She is the chief oil analyst there, and we will be looking forward to this meeting, especially since the last OPEC meeting was pretty much canceled. I think they had like a brief conference call, but they didn't do the whole thing. So it'll be a back to normal to some extent in terms of the meeting, although what they have to deal with is anything but. Coming up, Germany's Greens lose some momentum. We'll have the latest on the race to succeed Angela Merkel next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm Matt Miller. Welcome to Bloomberg Markets on this Memorial Day holiday in the United States. It's also a holiday in the UK. I was told it was simply a bank holiday that has no real meaning other than the fact that they want a day off. I was also told that it was the Whit Sunday bank holiday, which would be interesting because Whit Sunday was over a week ago. So if that's the case, they're a little late. It's supposed to be 7 Sundays from Easter, but maybe they do it differently in the United Kingdom. It is time right now for a Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. For that, we go back to Leanne Gerrans in London. Leanne?
Hi, Matt. Apple reportedly will open more retail stores even as the pandemic drives online sales. Apple Senior Vice President Deirdre O'Brien tells a German newspaper the stores create a connection with people and offer them a chance to experience the very newest technology. There are about 500 Apple stores around the world. Now, investors in China are paying little attention to the government's biggest crackdown on cryptocurrency trading since 2017. There has been a steady recovery on over-the-counter platforms that Chinese crypto traders have used since domestic exchanges were indeed banned. That underscores the problems Beijing may have in trying to rein in a boom in digital assets. Argentina will hold off on a $2.4 billion debt payment with the Paris Club that was due today. Instead, it will use a 60-day grace period to try to reach an agreement and avert another default. Argentina wants to refinance the debt after reworking a $45 billion loan with the IMF. And that's your Bloomberg Business Flash. Matt.
Leanne, thank you very much for that. Now let's focus in on German politics. The Greens declining for a second consecutive week as Chancellor Angela Merkel's party claws back support. Let's get more from Bloomberg's Agatha Cantrill. Aggie, thanks very much for joining us. Why are the Greens, who rose so spectacularly in the polls over the past few months, losing ground now?
Well, it definitely seems like the Greens have lost that initial boost that they got after electing Baerbock as their Chancellor candidate. But it's really worth noting that while the Greens have definitely lost some of that momentum, which is probably due to a couple of initial issues like undeclared bonuses on Baerbock's part from her party, but are also probably due to people getting excited about them when she first came onto the scene, and the polls shooting up because of that, and now that momentum sort of slowing down. But what's really worth noting is the fact that the gap between the Greens and the CDU has closed significantly since last year. The CDU, while is still polling as the highest party, has still significantly declined from their peak from May last year, and this election is still going to be much tighter than it could have been if it happened a year ago.
So what are the likely outcomes now? Because I've read that very few people want to see the same coalition in power, but very few people want to vote for any of the peripheral parties.
So the likely option that is going to happen in September is probably a three-way coalition. Currently, there are only two parties, or a bloc and a party, in government, and instead this would be looking at probably three parties in order to get over that 50% margin in order to build a coalition. Because right now, very two-party coalitions, except perhaps the Greens and the CDU, would be able to get over that 50% margin.
All right, very interesting stuff. Agatha, thanks so much for joining us. Bloomberg's Aggie Cantrill there with a look at the political situation here in Europe's largest economy. That does it for me on this UK bank holiday, on this Memorial Day, and I hope you all have a happy holiday. I'll see you back here on Tuesday. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it,
you're going to buy it no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Good morning from Dubai and welcome to Bloomberg Markets. I'm Menace Granny. The OECD out with its semi-annual economic outlook, raising its 2021 global growth forecast, but warning of an uneven global recovery ahead. We hear from some of Bloomberg's interview with the Secretary General, Anko Goria. China lifting its two-child rule in an effort to boost the country's birth rate and fix the looming economic problem of an aging population as China's factory holds firm in the month. Despite recent volatility, cryptocurrency platform Tron is committed to the digital currency. The company's founder tells Bloomberg why he's expecting the bull market this summer. Warm welcome to the show. You're tuned in to our Middle East headquarters here in Dubai. It's Memorial Day, so happy Memorial Day. Enjoy your barbecue, enjoy your elements that go on the barbecue. They're rising in price. But I want to give you a sense of what's going on in global markets beyond the barbecue and the driving season. It is the PBOC, the central bank of choice, which has come to the market and raised the reserve rate. Now, it's had no major impact thus far on the yuan, but they have issued a cease and desist notice on the currencies, assent, one could say. They've gone for jawboning over the weekend. The PBOC's former statistics chief says the currency is overbought and China will act against huge short-term inflows. So this is definitely one of those moments when you say, what is my risk this week? Well, your risk this week is, I suppose, in a number of different directions. One, intervention on the yuan. Two is that you could get a real spoiler alert, couldn't you, from the jobs report at the end of the week. But I want to show you what's going on in crypto land, never far from a weekend trading in Bitcoin and Ether. Ben Amons at Medley Global Advisors was talking about a triple bottom. That, for the moment, seems to have formed. Goldman Sachs say that Bitcoin could lose its first mover advantage. Its ascent, its preeminence could be fragile. Eventually, it will lose its crown as the dominant digital. So we keep an eye on digital and whether there is a bounce to come. Ben Amon says it could make it all the way back to $64,000. Now, the cash markets are closed. I know that you know that. You're on a beach somewhere having a good time. But have a look at the stocks on the futures side, because the Treasury market, I would say, is drifting. It's pricing in a social taper. The stock market is preparing itself for either an inflationary angst or how is it positioned? Bank of America say, position yourself for the second half for inflationary assets. Those are your markets. That's the context of where we are. As I say, the real risk is that you have FX intervention from China, and you have, of course, why would you want to take bond risk in a week when you'll get the wages and the jobs report on Friday? And, oh, a few Fed speakers in between. Let's get to Leanne Gerrans. She has your first word news from around the world. Leanne.
Hi, Manus. China will now allow couples to have a third child. It is an attempt to help the shrinking birth rate and aging population that are threats to the country's long-term economic prospects. For many years, China limited most families to have only a single child. That policy was relaxed back in 2016. Now, the OECD has raised its global GDP forecast for this year, but the Paris-based group warns that the recovery will be uneven and that living standards for some people won't return to pre-pandemic levels for an extended period. The new forecast calls for a 5.8% growth in 2021, up 0.2 percentage point from the last outlook. In Israel, Prime Minister Benjamin Netanyahu's opponents are moving closer to ousting him. One of his former allies has now agreed to join the alternative government that his rivals are trying to form. Israel has had 4 inconclusive elections, and that's been in the last 2 years. Shares of Chinese food delivery giant Meituan rose more than 10%. The company unveiled better than expected quarterly results that has also detailed plans to address the government's concerns about its business practices. The Chinese government has been carrying out an antitrust investigation. And French investigators are in Beirut to interrogate Carlos Ghosn. The former chairman of Renault, Nissan and Mitsubishi has lived in Lebanon since his dramatic escape from Japan a year and a half ago. Now, that was really to escape a trial. French authorities have accused Ghosn of siphoning Renault funds to pay for a yacht and also for his wife's birthday party. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Manus.
Leanne, thank you very much. Let's get to Danny Berger. She joins us now with the market action. Danny, so a lot of the cash markets are closed. We're going into a couple of big events, not least the OPEC Plus meeting, which will take place virtually. So it seems as if mobility is trumping the final round of discussions on Iran, and it is all about the demand side rather than the supply. Good day.
Good day, Manus. Yeah, that demand side, of course, crucially important here. And heading into that meeting, we are seeing Brent prices rise higher, not at $70 a barrel, just under it at $69.47, but still, it is the oil complex, the energy complex, the commodities complex. That's where we're getting the interesting action today. Iron ore also moving higher today. So it's interesting that in that light, what we do have of U.S. trading, of course, it's not the cash markets, it's the future markets. And yes, these moves are fractional, Manus, but they're carrying through a trend that we saw on Friday, and that is Russell 2000 outperformance, of course, small cap outperformance versus the big tech. This is a trade we've seen put on by a lot of people when there are concerns about those reflationary markets. Do the higher valued stocks, do they sell awful? Look, it's not big today, but it is towards that trend. Of course, as you say, as you mentioned about the bond market, I mean, the same thing might go for the stock market. Do you really want to be taking big risks right now when we have a lot of data, a lot of important data coming later this week? Manus, let me also give you a quick check on what European markets are doing so far this morning. Of course, it's not just the U.S. closed, it's also the U.K. closed as well. So we're seeing not exactly any clear trends because you can't go off of that. You have the DAX lower, CAC flat, IBEX lower as well. We're seeing a lot of those bond proxies not do well. Now, finally, of course, the big market story is going to be China, Manus. We have China changing up policy when it comes to the triple Rs. More people need to set aside more foreign currency reserves. So there is an effect here, Manus, but it's not a huge one. But it doesn't it kind of signal that China is willing to take more action when it comes to curbing some of the appreciation in the yuan?
Yeah, I've heard lots of theory, Danny, that it's to help them sort of quell the inflationary pulse through to it's a weapon that they'll use in their arsenal when it comes to Sino-US relations. You can take of that whichever you choose. Danny, we'll see you through the hour. Great to be with you today. Danny Berger there in London. Let's get a little bit more analysis on the market theme. Sebastian Galli is the senior macro strategist at Nordea Asset Management, and he joins us from Luxembourg. Sebastian, thank you very much for joining us. Straight to the messaging from the PBOC. We've got the RBA tomorrow, the PBOC. You saw the angst that the Kiwis caused last week, but here we are with the PBOC with a very firm message. Reserve ratios are to rise I see this action over the past 3-4 days as the cease and desist order on the rally in the yuan. What do you make of it?
Yeah, they're quite typical in the sense they're very strong on messaging, and the market typically follows it, and particularly the local market is very much keen on following the guidance that it gets from the PBOC, so it should be quite effective. Of course, it's less effective for foreigners. They see the yuan appreciating on the back of growth in China, but also on the back of the fact that there is some form of confrontation between the United States and China, and the way to avoid that confrontation is, of course, to let the currency appreciate. And so it's a difficult balancing act from the point of view of China, of letting some currency appreciation, but not too much. And of course, when the market gets excited, it becomes very dangerous because it's much more difficult to control. And they therefore have to take what is doesn't seem like a harsh decision, but it is a fairly harsh decision to increase by 2% the ratio.
When you look at the actions by China, this is something I've been pursuing with guests over the past several days, the action on crypto, the notice to cease and desist in commodity speculation, though they gorged on commodities. Here we are with reserve requirements. This is quasi-tightening by any other standard, isn't it?
It is, and one should look at it from a holistic or social optimizer point of view. They've looked into a lack of competition, basically, in their internet giants, and they're moving sector by sector and trying to address the problems. A huge problem from the commodities point of view, a significant problem in the next few weeks in the currency if they did nothing, and they're just being very logical and very good manager of their economy.
How important is it that they have a lower yuan to perpetuate the growth? And I ask you that question because we look at the PMIs this morning. On the manufacturing side, maybe a little bit of a topping out. Services still robust. How inextricably linked is the currency function to the growth function?
It's a poison pill in the long run. And this is the difficulties I think China is faced with. If it lets its currency always be cheap, then it will be offering gunpowder, for example, to the rest of the world for very cheap. But gunpowder can be offered by Vietnam. And that is the issue. If you want to compete with Vietnam, then you cannot be the China of tomorrow. And it's a difficult social problem that Taiwan has faced. Also, there's been a lot of criticism that they let their currencies too weak for too long. And that basically then creates an entire set of your economy, which is very fragile by nature. And the same has happened in China on a much larger scale. And it's a problem that they will need to manage over the next few years. It's not an urgent problem, but it is a very significant problem. And that means they need to let their currency appreciate, but appreciate at a relatively slow pace so that the economy can adjust, move towards a more higher added value problem, and stop competing with the likes of Vietnam.
The magical Goldilocks pace of appreciation, never mind Goldilocks in equity markets. The data this morning that we had on the PMI front, if you go into the depth of the data, it is about the prices. And I'm looking at the input prices here, the highest in 10 years. Now, this is not just a China-centric problem. This is a global vexation, isn't it? How do you adjust for what is, I suppose, a step change in inflation, whether it's permanent or transitory? Input prices are rising, and one needs to take preparatory action for that. How do you do that?
Well, input prices are rising, and you can say it's transitory, but if you're stuck in a company with a razor-thin profit margins, for example, then you're in deep trouble. You have to pass as much as you can to the rest of the consumer. And so it can be non-transitory. It depends on the sector that you're looking at. The inflation is so wild that demand for wood in the United States is generating higher prices for construction of houses, for example, in Germany. So it's a global problem and a global phenomenon. It will die by itself because it's an overshoot. And eventually we're going to go through the squeeze of that process. But as the data continues to be quite robust, then this process hasn't happened yet. But a short covering in the broad commodity space is to be expected, and it should be quite wild.
So I look at the bond market. Just let's round off with this. Core PC, the highest in 30 years. And the bond market practically yawned. Now, that either says that they want to wait until they get the jobs report, or a social taper has been priced in. Where do you fall down on that? Many people are saying to me, social taper priced in, get on with it.
Where do you
I don't think so. What probably is going to happen is actually non-farm payroll is going to disappoint. And the one part of the reason is that we were talking about inflation happening in the input side, but it's also happening on the wage side. People are overly optimistic regarding their wage expectations. That means that you could work for your local restaurants, but you work at such a horrible rate that you say, there's no way I'm going to accept it. I'm going to work for Amazon for $3 or $4 more, even probably $5 or $6 more. So why should I accept this? And as the weeks go on, you're forced eventually to accept it. But these weeks are happening right now, which means that the wage data might disappoint. The labor data may also disappoint. The expectation is roughly 660,000 according to Bloomberg consensus. It was 1 million last month, and the odds are that it's going to be south of that number. So what we're looking at is a duality of inflation, and that duality has to be resolved. It doesn't mean that in 2 to 3 months by September, the data won't be much better, and this is what we also expect. So speed bumps ahead, but a very good direction. And in September, they announced tapering, and I don't think this tapering is at all expected. We know that the announcement generally has an impact. We know that the market is also forward-looking, but the bubble is so large in so many asset classes that it's very difficult to believe that social tapering is priced in.
Sebastian, nice counter there. Sebastian Galli, Senior Macro Strategist over at Nordea Asset Management. Many bubbles of quite incomparable sizes. Amazon's on the block next. We talk about the scrutiny. This is Bloomberg.